Okay, today I want to talk to y'all about credit builder accounts. Now, what I want to say about credit builder accounts is this. I know you hear a lot on social media. You hear about Credit Strong, Kickoff, Self, Rent Reporters, Rent Karma, Credit Sesame. I'm not against those accounts, but I do want to say this. The underwriters know that those accounts are credit builder accounts. So those accounts either say you just come out of bankruptcy or you just come out of bad credit. That's basically what those accounts say. So I don't recommend those accounts. I don't like when I help people fix their credit, I don't build their credit with those accounts. But instead, what I do is, okay, credit, um, the rent reporters, I say, okay, rent reporters is cool because it's reporting rent, plus they will backdate your rent. So I go with credit, I go with rent reporters, or maybe even rental karma. And also on rent reporters, you can add your bills. You can add like water bill, gas bill, light bill. You can add certain bills. So that works in your favor too. But the other credit builder accounts, I don't really recommend those. But instead, what I do for my clients is I look for whatever financial institution they're with. And the financial institution that they're with, what I do is I go to that financial institution and I find out, because every financial institution, they do what's called savings secured loans, right? Every financial institution does that, savings secured loans. But what every financial institution does not do, they do not do a pay and release. What is a pay and release? A pay and release is if I did, let's just say, a $500 um, savings secure loan, which basically means I deposit $500 into my savings or my checking, whichever one, it doesn't matter. And the bank will grab that 500 and they will freeze it. But according to your account, it's gone. So it's not in my account anymore. They took the 500, but then they give me 500. They give me $500. And so some of them do it on a credit card, but most of them I don't really want to do the secured credit card thing. I don't really want to do that because a lot of times they'll try to do a hard pull off of that because it's a credit card. So you just want to do a regular savings secured loan, which it means it's an installment loan, right? And so it's not even a hard pull, it's not even a soft pull because you're using your own money. You just basically giving them $500, and then they're going to give you a $500 loan and charge you interest for the duration or for the maturity of that loan date. So if you give them $500 and you say, "Hey, I want a savings secured loan for this 500," okay, and they're going to say, "For how long do you want it?" And let's just say you said a year, okay. Well, they'll prorate that amount out, so it'll be 500, dollars. If they prorate it out every month, it'll be like 12, 500, divided by 12. That'll be the prorated amount, and then they will add their interest, and then that'll be the total amount you'll pay with their interest, whatever their interest rate is. If it's 2.25, that's like Navy Federal. But if the interest rate it may be higher than that at other banks, Navy Federal, they real good with their interest rates. But and so with the savings secured loan, what happened is, I will have that savings secured loan for the duration of a year, right? But if they do pay and release, then what I would do is I would get the secured installment loan because that's what it is. It's a savings secured loan, but on your credit report, it's an installment loan, and so it's going to report as an installment loan, and so what happens is for a year. So what I would do is I would take that 500, and as soon as they put the money into my account, the 500 into my account, I would take that 500 and I would pay 450 of it. right? And so when I pay 450 of it, that means that my next payment is not due until the 12th month. So what happens in the meantime? In the meantime, every month is gonna report paid as agreed, paid as agreed, paid as agreed, paid as agreed for 11 months, and I ain't even gotta worry about it. You see, I ain't even gotta worry about it. If I want to, which I do most of the time, like I have $50, I would divide that up into 12 months, and I would just have an automatic deposit going going towards the loan, just something every month. Even though I have it paid up for 11 months, I just still want something being paid toward it every month. And so I just have something being paid toward it every month, whether it's $1, $2, $3, whatever, $5. I would have that being paid to it every single month, but it's gonna report paid as agreed, paid as agreed, paid as agreed, paid as agreed for 11 months before it gets to me actually owing some money. And by time my whole intentions of setting it up every month by paying $1 or $2 or $3, then by time it does reach that 12th month, those little dollars or $2 or $3 or $5 then added up over the months and it done paid off the balance. So it's on auto pay. I don't even have to worry about that. And most banks will allow you to get up to three um, savings secured loans, or for Navy Federal, it's not called a savings secured loan, it's called a pledge loan, but it's the exact same thing. But most banks will allow you to get up to three of them. And see, this is the catch. When you do a savings secured loan, if you go to your bank and you ask for a savings secured loan, make sure you ask them, do they do a pay and release? Pay and release. Now, they may not know what that term means. They may not be familiar with that term because it's not a financial institution term that they use. It's something that I kind of just brainstormed and came up with, pay and release, because when you pay the money, they release your money. You see what I'm saying? So it makes sense. So if they don't know what pay and release mean, then you kind of break it down to them. Hey, what I'm asking is, if whatever I pay, will they release that, or will they keep all my money until the full term of the maturity of the loan date? You see what I'm saying? They shouldn't do that. It's not like a CD. It's not like a certificate. It's no maturity date. It shouldn't be like that. But some banks do that. For instance, our bank here in Monroe, Louisiana, Washita Valley does that. That's why I never did a savings secured loan with them. But most banks or most credit unions, they will do a savings secured loan and they will do a pay and release. So those accounts like that, if you have a bank, instead of you going to get, this Credit Strong and Credit Sesame and Self and all these, just go to your own bank. Just go to your own bank, put down, if you got $200 or $300 or whatever the amount is, you can do a savings secured loan with whatever amount that you got in your bank account, or whatever amount you deposit in your bank account at the time. Wait till you get a nice little chunk. Wait till you get paid. And soon as you get paid, you got to pay bills and stuff. But wait, if you got a day or two, in between that, because that's all it takes. When you get that check up in there, go apply for a savings secured loan. Go tell them you want to do a savings secured loan on the money.